Our next guest says that markets are being propelled by the relief over what has not happened, despite some residual uncertainty out there. For more on that and the soft landing narrative, we want to bring in Mohamed El-Erian, who is chief economic advisor at Allianz and president of Queen's College at Cambridge University. Mohamed, no news is good news, basically?
Well, we've had news, and it's been good news in the sense that it has fueled this soft landing narrative. And this soft landing narrative has coincided with money on the sideline. So the two things together lead to something that you want to be part of. You don't want to be pushing against. That is the tactical view for the next few weeks. Beyond that, we're going to go back to the issue of how sticky is inflation. Will the Fed overdo it? And can the economy and the non-bank financial institutions navigate the cumulative impact of the rate hikes? But I would not get in the way of this rally, and it's being fueled not only by domestic factors, but as we see today, by international factors as well.
Bank of America has their July Global Fund Manager survey out this morning, and I was a little surprised to see that, according to them, that sentiment still is pretty bearish out there. They said 60% of investors expect weaker global growth, higher levels of commodities, and that the fear factor is still greater than greed. I mean, that's usually a recipe, if you get good earnings numbers, to bring some of those people back into the market.
Yes, absolutely. That's why the technicals are favorable, is because you've got people who have stayed out of this market and now are being pulled in by a very strong soft landing narrative. You know, soft landing narratives are wonderful because you can get higher stock and bond prices. So they bring people in across the board and out of short-term cash, because what's also happening on short-term cash is that yields are coming down sharply. So you have both the push and the pull factor. And I don't expect this to change anytime soon. When we get towards the end of the summer, when we get to Jackson Hole, it will get a lot more interesting.
Mohamed, what could be a catalyst? I mean, people still waiting for something to happen potentially in the fall. How likely do you think that is? If a soft landing is much more likely, what's taken out here? Is the Fed potentially getting to the point where they're going to stop hiking rates, and maybe that leads to a little calm among investors and the markets?
That's the hope. The market clearly thinks that we're going to get one more rate hike next week, and that's it. And the next move will be a cut. The Fed is not there yet, so we will be listening very carefully to what Chair Powell says about the forward guidance. What could get in the way? A few things. One is a Fed that over-tightens. That could get in the way. Two is inflation proves to be sticky. There's a number flying totally below the radar screen, which is what happened to core inflation in the Eurozone. That went up rather than come down. So the inflation dynamics are worth keeping an eye on. And then don't underestimate the cumulative effects of the rate hikes, especially on the highly levered sectors. So these things are to watch. That's why you want to be tactically risk on, but strategically keep an open mind and keep on revisiting these three factors.
What would make you change your mind? What would make you say, okay, forget it, risk off?
Oh, it would make me change my mind if the Fed comes out, for example, and says, I don't care about what's happening. I am going to still do at least two more hikes. And the word at least would be, the market will not like that at all. That's one possibility. The other possibility is some sort of small accident among the non-bank financial institutions. You know, we know commercial real estate is under pressure. Today, we're getting earnings from the regional banks. And the good news are deposits are coming back. The bad news for them is their funding costs are going up significantly. So we have to keep an eye on these things. But as I say, you should not get in the way of a rally driven both by technicals and a narrative that has really been embraced by investors and traders.
And Mohamed, to that point, did the real estate issue somehow go away? Did we forget about it? Are we wearing blinders? I mean, literally, only several months ago were we talking about real estate being a real problem for small and regional banks, that when you think about some of these cities that are struggling, It's, and it will rear its ugly head. People thought end of 24, end of 23, into 24, that's when you'd start to see the trickles of it? Or is it that as rates come down, assuming they do, and other things get better, that it can be mitigated?
So certainly lower rates mitigate the problem, but don't eliminate it. And the issue with these things, Andrew, is that slow moving. So some people feel like it's watching paint dry. I don't like that analogy. I like another one is, and since we're in the summertime, you're on the beach, you have a sand mound and you keep on adding sand on top. Nothing happens for a while, but you've got to be careful that it doesn't suddenly change shape. And that's what we've got to keep an eye on. It is very slow moving. The refinancing of the commercial real estate happens over time, over the next 12 months. So it's not a dramatic move, but it's something to keep on the radar screen.